Yes, I've just cut my hair because I think I got a few subscribers, right? They have been asking me previously, like, "Hey, Rainer, don't you ever cut your hair?" Well, like, matter of fact, I do. I cut it pretty regularly, actually. I cut it once every about 3 to 4 weeks. And yesterday, I've just cut it again. So this is just to to let you know that I'm someone who cuts my hair. It's not that my hair doesn't grow, but it's I cut it regularly. Okay? So back to this week's market analysis, I want to share with you this currency pair. It has fallen 25% in 2014 alone. And in 2015, guess what? It ranged for the entire year. So I think that caught many traders by surprise, because usually when price has fallen so much, they expect the selling to continue, or at least reverse. But hey, it ranged for the entire 2015. And the interesting thing is, I'm starting to see some cracks in this currency. And I want to share with you what this currency is and how I'll be looking to trade it. So all this and more in this week's market analysis. I'll see you there. Alrighty. So the pair that I was actually talking about is none other than the euro dollar, right? Here's why. In 2014, the high was here, and it traded all the way to the low somewhere here. So it had a drop of almost 25%. And in 2015, I think most traders would expect the similar magnitude. Okay, maybe not similar magnitude, but lower prices to come for 2015, because 2014 was such a bloodshed year. But what happened in 2015? Look at this. Well, it went into a range, didn't it? I think basically, catching many traders by surprise, right? They were surprised by why isn't euro dollar falling? Why isn't it in the range? Is this the bottom? Is this the end of the sell down? So a lot of questions like this. But if you look at the big picture, the weekly chart, and if you ask me, it's still too early to conclude that the trend is over. Right? To me, if you look at this chart, you ask a 4-year-old kid, he's going to tell you that from left to right, price is trading lower. And clearly you can see that, right? So, euro dollar to me is still in a downtrend. And am I looking to short? Yes, I am. In fact, I'm really short, and I want to share with you why I went short. So on the daily chart, you can see that price was in this range over here. This is the highs, and we have these lows over here. So these lows, if you ask me, this support area is a significant area, right? Price rallied higher, came back, tested once. Then it rallied higher, came back, tested twice. Rally higher, came back, tested thrice, and had a break and close below support. It break and close below support. So at this point, to me, this was a significant event, because for the last 6 months, price has not closed below this area of support, right? This 1080 area. And it did. So I was thinking at this point in time, if price closed below, I think it could just be a false breakout, and the next 1-2 candles price could just simply close higher from here. But the thing is, it did. Instead, what it did was it consolidated below the low of support. It consolidated below. So what does this consolidation mean? Well, it's telling me that the buying pressure is no longer present. Because if you think about it, if that area of support is an area of demand, there should be buying pressure to push price up higher. Price shouldn't be trading at this area of support for a long period of time. Because if there is buying pressure, why should price still be trading at this area of support? The buying pressure would push price higher, wouldn't it? An example is this pound dollar you see over here. You see, price came into this area of support, and within 1 day, 2 days, is trading above the support area. Sorry, I messed up. See, within the second day, it's trading back above the support area. So there is buying pressure over here. There is demand for the British pound over here. But when you look at a euro dollar chart, that same buying pressure you saw earlier isn't present over here. In fact, what is telling me that it's an area of fair value right now. The bulls and bears, they are in equilibrium. We do not know at this point in time who will win the battle. It's too early to tell. But I can tell you that there are 3 categories of trader right here, right now. Number 1, the first group would be traders who are long. They think right now euro dollar is cheap because it's an area, it's below an area of support, right? It's of value right now. So they go long and they place their stop loss below this swing low over here in anticipation of higher prices. This is the first group of traders who are long. Then you have the second group of traders who basically short the breakout over here, thinking that the euro dollar would continue its move towards the downside. So they got short, had their stop loss possibly just above this swing high over here. Second group is short. And there's this third group of trader who are now on the sidelines. They're not doing anything as of now. But what they could potentially do is that if price were to trade below this low over here, they would go short. And if price were to trade above this high over here, they would go long. So we have these three groups of trader right now. And which group of trader am I in? Can you guess? Well, I happen to be this second group of trader. I'm short right now. And here's why I went short. Let me show you why. Again, there's no guarantee that I'll be right. But let me share with you my thought process on why I went short. Right, you can see on the forward chart, we have this dynamic resistance over here. When price came in to this area, I got short, had my stops of 2 ATR somewhere here. And basically, I'm short the euro dollar. I choose to follow the trend. I could be wrong, and this is why I have a stop loss in place. Because if I'm so certain that I'll be right, I wouldn't be using a stop loss, wouldn't I? So this is my take on the euro dollar. So again, if things go in my favor, price does trade lower, triggering the lows over here, those longs who get stopped out, what would they do? Well, if they had a stop loss over there, their stop loss is essentially a sell order, wouldn't it? It's a sell stop order. So if more sell stop order comes to the market, and the third group of traders who are basically looking to short this breakout would basically push price lower, wouldn't it? So this is ideally an ideal scenario for me if that happens. Alternatively, if I'm wrong, price trades above this high over here, then price rallies. What happens? Traders who looks to, the third group of traders who look to get long, right? Because they think this is a false breakout, they look to get long. Traders who are short get caught short, would fuel further prices which are higher, right? Fuel further higher prices. So this is my take on the euro dollar, and we shall see what happens next in the coming week. Honestly, I can't predict, and this is why my stop loss are set in place. Up next, let's look at the New Zealand dollar. So New Zealand dollar weekly chart again is in a downtrend. You can see price testing the 20 and 50 period moving average as a dynamic resistance. The red line here is the 20 period moving average. The blue line here is the 50 period moving average. So you can see that over here was an area where price tested and then traded lower. On the 4-hour chart, right now is something pretty much interesting that is setting up, because I'm seeing a potential trading opportunity. Why is that? Because you know on the weekly chart, the trend is on your side. And on the 4-hour chart right now, you can see that there is a potential head and shoulders pattern over here. And this is the neckline. This is the left shoulder, the head, and the right shoulder. Now, why is this significant? Well, because if you look at it from a price action structure, you can see that the bulls try to push price higher. Then the bears say, nope, that's as far as you're going to get, my friend. Then they push price back down all the way lower. Then the bulls, still not wanting to give up, stage an even higher rally, right? Taking out this swing high over here. And the bears, once again, say, hey, that's as far as you're going to go, right? They push price back all the way lower, testing these lows over here. And then the bulls, still wanting to push price higher, don't want to give up, stage another rally, but it's a very weak rally. You can see it's only 2 or 3 candles higher. And this rally is weaker compared to this rally over here and this rally over here. The third rally is very weak. You look at the size of the candles, you know there is not much strength left in this move. Then the bears came in and pushed price down lower once again. So at this point, you have a neckline that you can actually draw out, right? You link the lows together, you have this thing called the neckline. So at this point in time, if the bears were to regain control, this neckline has to be broken. So this is what I'm watching for in this coming week. If the neckline can be broken, I'll be looking to short the New Zealand dollar. So we shall see whether the bears can finally regain control and continue with the weekly trend, or the bulls will stage something surprising and push price higher. So this is something that none of us can predict. All we can do is just analyze the market, look where we want to enter, where we want to exit, and accept if we are wrong. Okay? So up next, let's look at another one. Platinum, shall we? Because platinum, I think, is a market that we have been talking for over the last 2-3 weeks. Again, very similar to the New Zealand dollar. You see that, again, the 2050 is acting as a, I think it's more of the 20 period moving average is acting as a dynamic resistance. So what happened, I think 2-3 weeks ago, I said this. I said there is a head and shoulders pattern over here. And there's two ways you can trade it. Either you trade the break of the neckline, or you trade the break of this low over here, forming this flag pattern. So either way, this sell down, you would have caught it. And how you can look to trail or stop is this. You can use the 20 period moving average because it's still acting as a dynamic resistance. What you can do is trail it above it. If price close above the 20 period moving average, it's a good time to get out. And that's where I will get out of this trade as well. So as of right now, depending how much you risk on each trade, if you're risking 2% on each trade, this trade will be easily up 10% for you. So I hope all is well on your side, and we'll see what happens next in the coming week. And last but not least, let's talk about crude oil. So crude oil, the WTI, I was talking about it last week. I said that, again, just to do a brief recap, the weekly chart is in a downtrend. Daily, I spotted this head and shoulders pattern. I said that if the neckline is broken, you can go short, or you can wait for a pullback higher, right? Trading higher before taking a short once again. So, an honest truth down here, I did not short the WTI. Instead, I short the Brent crude oil. So this is the Brent crude oil. Again, very similar pattern. This is the neckline over here. So I took the short when price break below the neckline. So why did I go with the Brent crude oil? The reason is pretty simple. Because I find that it's a relatively weaker market compared to the WTI. So I went with the Brent crude oil instead. But honestly, it's not going to make much of a difference down here because whether you trade the Brent or the WTI, you should be in profits right now. Okay? So that's all I have for you in this week's market analysis. I hope you get something out of it, right? And I can say that it's a joy to me if it helps improve your trading. You become a better trader. You become better in your risk management. I will be really, really thrilled about it because I know whatever I'm doing is actually, helping you. And this is the entire purpose of my weekly market analysis. It's not to make money off you. Whatever I do is for free. And it's my hopes that you become a better trader at the end of the day. So if you have any questions, any comments, feel free to leave it in the comment section below. Okay? With that, I wish you good luck and good trading. I'll talk to you soon.